All right. What is up, everyone? Welcome back to another episode of the Sound Money Podcast. I'm your host, Steve McGarry. And as you can hear today, I am quite sick, but this article came out and I had to jump on here and talk about it. So, an article came out that said that 91 of the top Fortune 500 companies had an effective federal tax rate of 0% in 2018. The list of companies covers a wide range of industries and includes some of the biggest companies in the United States. So, this was done by the Institute on Taxation and Economic Policy that I follow quite closely and have covered on the channel in the past. If you guys are watching on YouTube, don't forget to like this video. It really helps. And don't forget to subscribe if you're listening on iTunes and Spotify. Much love to everybody for all of the support. Also, the link to my course is in the description below, learning how to buy and sell websites for passive income. Now, jumping into this, the study was done about the effective tax rates of 2018 and the Tax Cuts and Jobs Act, TCJA, the tax law signed by President Donald Trump at the end of 2017. The law ordered the statutory federal corporate income tax rate it lowered it to 21%, a 40% decrease from the previous 35% rate, and made other changes effective how companies pay. The examination of the Fortune 500 companies' financial filings identifies 379 companies that were profitable in 2018 and that provided enough information to calculate effective federal income tax rates, which was a pre-tax profit they paid in federal income tax. So, why is this important? Now, this is a misstep that a lot of people make here, and I'm going to clarify before I go through a little bit further on who the companies are that are well known. To clarify, the companies themselves are paying that 0%. The employees are paying taxes. Once again, the company, the entity itself, is paying this effectively a 0% tax rate, but the employees working for that business are paying the taxes. Now, the key findings from the report here: 379 profitable corporations identified in the study paid an effective federal income tax rate of 11.3% on their 2018 income, slightly more than half of the statutory 21%. 91 corporations did not pay federal income taxes on their 28%. That's kind of a just restating what I'd already said in the report. Another 56 companies paid effective tax rates between 0% and 5% on their income. Their average effective income or their average effective tax rate was 2.2%. Interesting. Now, 91 that paid the zero were Amazon, Chevron, Halliburton, IBM, and a bunch of other obviously well-known companies. Now, to clarify, Amazon employees were paying a lot in taxes. So it's very important to once again mention that employees are paying taxes, the entity themselves are not. Now, looks like 5 companies, Bank of America, JP Morgan Chase, Wells Fargo, Amazon, and Verizon, collectively enjoyed more than $16 billion in tax breaks in 2018. The tax breaks identified in this report are highly concentrated among a very few large corporations. Just 25 companies claimed $37.1 billion in tax breaks. 25 companies claimed $37.1 billion in tax breaks. That's almost exactly half of the $79.3 billion in tax subsidies claimed by all 379 companies in the study. That's pretty mind-blowing. Now, once again, this report came out yesterday, the 16th of December in 2019, and it's mainly just emphasizing by the Institute on Taxation and Economic Policy, the corporate tax avoidance in the first year of Trump tax law. Now, these are the findings that I've gone over. It's important once again to know that there are always going to be loopholes, but one of the things that I want to bring up in light of the upcoming Democratic presidential debate here in Los Angeles is that they are going to be on stage talking about various different things, and there's only one candidate that I know of that's talking about a VAT. Now, this whole wealth tax concept I've covered on the channel in the past is it has not worked in the past. And I know that it's important. The word wealth tax sounds great and it sounds awesome, but it's been tested and it's failed multiple times. In France, it failed massively. They put a large tax rate, even less than what is being proposed by some of these candidates like Warren and Bernie and things like that. They slapped the tax rate on the super wealthy living in France, and they just moved. They left and said, "We're not paying these taxes. We're going somewhere else." And that move alone cost the government more than they ever could have anticipated. I believe it was 50% more of if they even wouldn't have implemented it. It was a drastic hit to the economy there when that happened. So one of the really, really interesting parts about this wealth tax thing is no one's talking about the failures in which it has taken place in the past. And the VAT is being talked about by Andrew Yang. I brought him up quite a few times on the pod in the past. I enjoy his policies, the fact that he is the only person of color on the stage, bringing diversity to the Democratic debate. I think that it is a very powerful thing for him to be up there representing, talking about these economic policies and changing the GDP, adding the VAT to businesses to effectively cancel a lot of this 0% by almost 100 of these Fortune 500 businesses paying zero in Fed tax. So what he's proposing is a VAT, which means that every transaction that goes through Amazon, it would be paying into a taxation effectively. So we would be almost applying tariffs. And many people say, "Oh, that's a consumer tax. Everything will be more expensive." And in reality, that's true. But the competition doesn't change. The market doesn't care. The market adjusts. And if you're a business and you jack up your prices, people are not going to be buying your goods. They're going to buy someone else's goods that are cheaper. So with competition, the way that it works is prices drive down for consumers. And when there's good competition in the marketplace and people are providing equal, if not greater than value amongst themselves, the consumer gets to choose. And if they're very price conscious, they are going to go for the less expensive one. And if you are jacking your prices up too much, you don't go through your supply chain and trim off fat and make sure that things are optimized, then you get pushed out. That's just how it works. And value-added tax is the way to get around this massive quantity of tax loopholes, tax avoidance, we'll call it. Corporate tax avoidance is at an insane high right now. And I'm impressed, honestly, that this many companies have, obviously they're public because they're in the Fortune 500, but I'm just impressed at there hasn't been much conversation about this. I know that this report is brand new, and I'm going to be linking to it below so you guys can check it out yourself. But I'm just impressed at that this isn't more in the mainstream news. The fact of all of these companies, almost 100 paying zero tax. Everybody likes to point at Amazon, and they're forgetting about Chevron, Halliburton, IBM, all of the household names. And in April 2019, the study started going through and examining 2018 Fortune 500 filings, and they found 60 companies paid zero, and the others were paying like slight percentages here and there. So it is disheartening a little bit knowing that they are operating and effectively eliminating a lot of jobs by automation, things that Yang talks about quite a bit. And I'm excited to see what the debate this week goes through, not only because of this massive report that just dropped about all of these companies that are bypassing federal income taxes. I think that it is really, 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 really important for people to know about these things and to monitor these things because they come out and it's like a tiny little drop in the woods. No one really hears about it, but this is a substantial bypass here. Just 25 companies claimed 37 billion in tax breaks. That is crazy. 37 billion with a B. And it's exactly half of 73.9 billion claimed by all 379. So it was a big tax law that got written in. And it's important to follow these things because you start to realize, like, okay, there are actual massive publicly traded visible companies that are going past this. Their employees are paying taxes. So I want to pass the question off to you guys as the listeners and the viewers. What do you guys think? Is it okay that they are paying zero in taxes, but their employees are paying all of these taxes? I mean, that's not included in the report. That is not mentioned whatsoever. So what do you guys think in the comments below? Let me know your thoughts. I'd love to know if you think that that's fair, if you think that's unfair. What do you think about these 100 companies that are getting these massive tax breaks? And let me know in the comments below. And if you guys are brand new here, like the video, it helps the channel. And also, if you're new on Spotify or iTunes, don't forget to subscribe. And that is it for this episode. I'm going to go take a nap now that I've read through this report, and I'm going to get better. And I will be back on here in no time. And I will see you guys on the next episode of the Sound Money Podcast.